The expectation and the norm is to win, and that is what we will be able to do here. I believe in the power of UCLA.
It's a new day for UCLA football with new head coach Bob Chesney taking charge, and we need you to be a part of it. The right man is at the helm in Westwood, and the time is now for you to put your support behind the Bruins. UCLA football is ready to win, and we can't wait to see you this fall. Visit UCLABruins.com/tickets for more info on how to secure your seats for the 2026 season. Go Bruins!
Good afternoon. We're getting right down to business here. We are doing it live, doing more at 4 weekday afternoons, right after the Guy Benson Show at 3 and just before the 790 KBC News Blitz. It's Motec on Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com. And the on-demand Motec on Money podcast, kbc.com, Apple, iTunes, Spotify, YouTube, all your favorite podcast platforms. Stocks took a dive at the opening bell on Wall Street today, but closed well off the lows of the day. It's nervous times with war against Iran underway. The Dow was down about 1,200 points at the worst levels of the trading day, but came in for a closing loss of 403. The S&P 500 slid 65, and the NASDAQ dropped 232 points. The volatility index, the Wall Street Fear Index, the VIX Index spiked another 10% today. Gold and silver also came under pressure. A day after a spike, the Bitcoin reading around 68K here at the moment. The price of oil moved up as the U.S. and Israel continue to obliterate targets in Iran. Among the latest developments, Israel sent troops into Lebanon to go after Iranian-backed Hezbollah targets. Iran continues to fire missiles and drones into neighboring countries, including one that hit the U.S. consulate in Dubai. President Trump, meanwhile, says the U.S. Navy could escort tankers through the Strait of Hormuz in an effort to keep the free flow of energy during the Middle East conflict. The president on social media said he's ordered the U.S. Development Finance Corporation to provide at a very reasonable price, in his words, political risk insurance and guarantees for the financial security of all maritime trade, especially energy traveling through the Gulf. The president posted, if necessary, the U.S. Navy will begin escorting tankers through the Strait of Hormuz as soon as possible. I'll discuss the latest military action today, later this hour, with retired U.S. Marine Corps Lieutenant Colonel Hal Kempfer, former Marine Corps intelligence officer, national security analyst, and host of the Strat podcast. And on the impact the Iran war is having on oil and gas markets and the price you're paying at Southern California gas pumps, we'll be joined live later this hour by oil analyst John Kilduff, at Again Capital and CNBC contributor. Concerns that higher energy prices could boost inflation drove U.S. Treasury yields higher, but they retreated some in the afternoon, with the yield in the 10-year note now at 4.06%. Brent crude, by the way, briefly topped $85 a barrel, hitting the highest level we've seen since the middle of 2024. Looks like a price of oil in New York is hovering at around 74 and change, just below $75 a barrel here at the moment. This is interesting. Blue Owl Capital, we heard about this one a few weeks ago, one of Wall Street's biggest private credit managers with more than $300 billion in assets, back in the news today, permanently shutting the door on investor withdrawals from one of its retail-focused funds and ended quarterly redemptions. Joining us live now, veteran market strategist Art Hogan, to cover all these major developments today, chief market strategist at B. Riley Wealth Management. Art Hogan, thank you very much for taking the call live with us here this afternoon.
Frank, thanks so much for having me, especially on a hectic week like we're facing over the course of the last couple of days.
And for decades now, you've been following developments like this. We've seen the previous Persian Gulf Wars and, of course, the Russia-Ukraine conflict ongoing and so many other things. Give us your reaction, first of all, to the epic developments of recent days.
Yeah, I would tell you this, Frank. One of the things that you have to contemplate as a long-term investor is what typically happens when a war breaks out. And if you went back to World War II and then sort of fast-forwarded to today, we've had a multitude of military actions that have spooked markets, but at the end of the day, if you look back 6 months later, markets are up about 70% of the time. So one of the things you don't want to do is get spooked out of your long-term investment plan. The other thing you have to understand is there's going to be a lot of conflicting news stories, and war is obviously scary. But at the end of the day, the market moves on earnings and economic growth, and unless and until we get to a place where this war impedes the earnings growth of the S&P 500 or the economic growth of the United States, it's likely not going to affect your long-term portfolio. All of that said, what we're going through right now is something that has everything to do with the potential for inflationary pressures because of higher energy prices. So we've seen about a 14% spike over the course of the last 2 days in both Brent and WTI. That backed up a little bit today. As you mentioned, the White House is looking at a couple different ways to protect the Strait of Hormuz and get the flow of traffic, which is about 20% of global petroleum product, back on the market, which will likely take some pressure off the price per barrel of oil. Now, you couple that inflationary concern with the fact that last week we had a PPI that was a little hotter than expected. We'll get the Fed's preferred inflation gauge, the PCE, this week, and that's probably going to be a little hotter than anticipated. And that then has investors thinking, well, are we working our way into a place where inflation is not pulling back, and does the Fed not cut rates? All of that is thrown into the cauldron of concerns that we have in the markets right now. But at the end of the day, I think that when you take a peek at what's been happening in markets, while we've had some massive volatility with the VIX north of 28 at one point today, we're also seeing some sensible rotation, right? So you're seeing the markets doing what they should do in reaction to this military conflict. We've got travel stocks and consumer discretionary stocks that are down. That makes sense, right? You have energy stocks that are higher with a spike in energy prices. You've got the aerospace and defense stocks that are doing better. You had a flight to quality in both gold and silver yesterday, a bit of that pullback today. But all of that sort of lines up with the playbook. But what I would tell you is it's about duration, and if, in fact, we can limit the disruption of supply of energy product is the biggest piece of the puzzle here, because this is happening in Iran. They ship about 3 million barrels to China on a regular basis. The path for them to ship that is the Strait of Hormuz, and that right now was blocked for a couple of days, and there's 900 tankers at anchor. If that opens back up and we can get some resolve on that piece of the puzzle, there'll be less concern about that inflationary impact and what's going on. Of course, we don't know how long this is going to last, and the White House has talked about this being not days but likely weeks. And hopefully we can all take a step back and say, well, perhaps this gets us to a better place in the Middle East. But right now, I think investors should be reminded, if you're a long-term investor, wars typically don't adversely affect that program. 6 months after every war that started since World War II, 70% of the time the market's higher later. So don't make any rash decisions about your investment portfolio.
See it tonight, read about it tomorrow, but hear it now on Motech on Money, live on the air with veteran market strategist Art Hogan at B. Riley Wealth Management. Thank you for that very thoughtful analysis, as always. Let's talk about the high flyers now. Gold and silver, we did see that big spike yesterday and a pullback today, as you noted. What about gold and silver here? What is the outlook here after hitting record highs? We've seen a bit of a pullback, but still historically pretty high at the moment.
Yeah, very historically high, Frank. You and I have talked about gold and silver for decades, and over the course of the last several years, gold and silver and all precious metals have had a significant run. This is probably a 4-year-old story that started when Russia invaded Ukraine, and there were assets that were frozen, and central banks and international buyers wanted to hold more gold than they wanted to hold treasuries and U.S. dollars. So that hasn't changed. And then the ease of access to buying gold with the GLD ETF or the SLV silver ETF has made retail investors able to play the market. But what also happens in this momentous move, and the momentum move that we saw, brought in new players that are actually just playing the momentum. So when you hit an all-time high, you see the momentum players peel back some of their exposure. I think the long-term story for both gold and silver is very positive. I think there's a plethora of demand coming from central banks. That's not going anywhere. I think the supply is very limited. I think in the near term, obviously, you're going to see some peaks and troughs through some of these volatile moments. But I think the long-term story for both gold and silver as a diversifier in your portfolio will remain intact.
And while the precious metals have held up pretty well, cryptos, Bitcoin in particular, down nearly still about 50% from the record high. course, on this show, we talked to the biggest fans of crypto as well as the harshest critics. We did hear from Michael Saylor recently, who's big on Bitcoin with his strategy, and said recently that Bitcoin could go to zero or a million. Where do you weigh in on the cryptos here now?
That probably is about the right range, right? So cryptocurrencies in and of themselves have yet to prove out their use case, and that's okay, right? So I think the blockchain technology is going to make us better and more productive at transactions, and most financial institutions are setting up blockchain technology to transact things. Now, Bitcoin and Ethereum are the two incumbents, and I would only talk about those, but we haven't seen the use case that was described to us 5 or 10 years ago about Bitcoin actually come to fruition. It hasn't been a store of value. It's just been a very volatile asset. It hasn't been something that we used in transactions. Nobody buys anything from pizzas to just about anything as a currency. So to the extent that it hasn't been a hedge against inflation, so I think the use case is being called into question. I don't think the blockchain or the two Bitcoin and Ethereum currencies are going to go away, but it's not for widows and orphans, Frank, and it's not for the weak of heart. There's going to be a great deal of volatility. If you track the volatility on a typical year since Bitcoin was invented, you'll notice that when markets will have a 5% drawdown, Bitcoin can have a 40% drawdown, and that's what we're going through right now, and it will likely rectify itself, and the apostles of Bitcoin and Ethereum will likely come back and be right, but it's not for the faint of heart. So if you want a diversifier in your portfolio, I think a lot of people are saying gold's probably a better place, or silver or precious metals, especially if you're you're in my age, which is certainly north of 40 years old.
What's going on in the financial world here with this Blue Owl Capital story popping up again today? Turning its ugly head, I guess we could say, since we're talking about owls here. What about this story, and what's happening in the credit markets?
Well, there's some concern that private equity and private credit are, in large part, can be exposed to software. And to take a step back and say, what's happened to software, artificial intelligence, and the fear of artificial intelligence displacing a lot of software providers has kept software down. And a good 25 to 30% of most private equity, private credit firms hold software companies. They're the up-and-coming stars that they hope they'll have an exit strategy through an IPO, and that window is probably closed for a bit now as software is under pressure. So therefore, that calls into question those credits and those equities that sit in private equity and private credit that are software-based. I think Blue Owl is not the tip of a larger sword. If you look at credit spreads overall, credit looks to be pretty tight. I think Jamie Dimon did a great job of talking about that today when I was listening to him. I think, I think it is a good signal that perhaps allowing the retail investors to invest in private equity and private credit and publicly traded venues may have gotten ahead of itself. You have to understand that private equity and private credit means a long-term investment, and sometimes those vehicles are going to have to put up gates because they just can't find the liquidity to pay you back. So right now, I don't think we have a big credit crunch in private credit or in public credit. I do think that software is going to have a difficult time to have an exit strategy on the private side into the public markets. I think that's been one of the biggest drawdowns. But I think overall, if you look at perhaps not Blue Owl, but some of the larger players like Apollo and KKR, a lot of that carnage is probably overdone right now.
On the air live with Art Hogan, Chief Market Strategist at B. Riley Wealth Management. The volatility index spiking again today. As you noted, would you continue to bet on volatility? And what do you think about the VIX index as an investment vehicle?
Well, I'll tell you this. The VIX index, when it gets to these levels, typically indicates that we're getting closer to a bottom, not to a top, right? So every time we've seen the VIX explode north of 25 and certainly north of 28, it's been a point at which we've had a capitulation bottom in some of the carnage. So if I were trading the VIX right now, I would be a seller of the VIX and a buyer of the S&P 500. And I think that's typically, if you look over the history of how that VIX, which is basically a measurement of how much protection is being bought against the S&P 500, I think that it's getting to that level where it's probably getting extreme. That said, a lot of this is dependent on the news flow that we get out of Iran and the Middle East and how things are tracking. If this, instead of lasting 4 days or 4 weeks, lasts much longer than that, then we can certainly see a lot more volatility in the market, and that VIX will likely stay elevated. But I think anytime you get north of 25 and get closer to 30 than you are to 25, it's likely a time to sell volatility and get back into a core investment like the S&P 500.
All right, and what about the Mag 7 names? Apple with that new iPhone this week, hovering at around 264 or so. Of course, the Magnificent One, NVIDIA, has come under some pressure today, down a couple of bucks to 180 and change. What about the Mag 7 names at this point?
Yeah, it's such a great question, Frank. And I would tell you this. When you take a step back and look historically at sectors that are agnostic to or insulated from geopolitical uncertainty, technology tends to be that. So if you look at the Mag 7 or the largest mega cap technology stocks, they tend to not be affected by rises in oil prices, geopolitical uncertainty. So I think that's why we saw a bid in technology yesterday. Didn't see it as much today. We saw a certain bounce in NVIDIA. But I think in general, if you take a step back and say, the fact that technology and communication services, where the Mag 7 lives, are two of the worst performing sectors in the S&P 500, they're coming into this conflict at a point where their multiples are as low as we've seen in 5 years. So I would be a buyer of the Mag 7 and certainly of mega cap technology here. I think it's less affected by geopolitical concerns, higher energy prices, the potential for an economic slowdown. You and I are not going to stop using our Wi-Fi. We're not going to stop using our office products. We're certainly not going to stop using our iPhones, agnostic to what's going on in the geopolitical universe. So I think tech stocks are to be bought here, one of the worst performing sectors here. Where I would be careful, I know I'm front running one of your questions, where I'd be careful is jumping into energy stocks that have been elevated by what may well be a short-term spike in the commodity price.
You do such a great job, Art, and I know you've been very busy, and you do such a great job on all the financial networks. I'm going to get to that big question in just a second, but with so much going on, am I missing anything? Have you been asked any other good questions today, and what else is top of mind as far as you're concerned at the moment?
Yeah, so I've been asked questions since this began over the weekend. You know, the best of the questions have been, what does the market typically do when wars break out? And oddly enough, if you looked at all the wars going back to World War II, 6 months later, the market's been up 70% of the time, at least 5% higher from the beginning of the war. That's something to lean back on. What really is dependent on that reaction function is the duration, right? So, remember, Ukraine was invaded by Russia 4 years ago. We thought that was going to last 4 months. The world moved forward around that, right? We'll move forward around what's going on in the Middle East and Iran and hopefully get to a better place.
All right, let me get to the big question.
That I would note.
Go ahead.
The only thing I would say is, if you're a long-term investor, Frank, you don't want to change your long-term investment plan because of the breakout of war.
At this point, Art Hogan, any specific places where you are putting money now and or taking it off the table?
Yeah, I'll tell you this. If you look at the 11 sectors in the S&P 500 right now, this morning, at the open tomorrow, the most overbought, I think, is consumer staples. It's a very defensive play, but the multiples are extremely high historically. The most oversold sector is the financials, and I think that's probably one of the best buying opportunities. So if I were to invest one thing tomorrow, I'd be looking at paring back on staples and buying the financials.
Terrific, Art. Thank you very much for taking the call on this big day, this big week, and we'll continue to keep an open line to you. That is veteran market strategist Art Hogan, Chief Market Strategist at B. Riley Wealth Management, which happens to be based right here. Thank you very much, Art, for joining us live here this afternoon.
When you really need care, you need 24/7 access to a care team, not a maze of paperwork from a third party. Every day, America's hospitals and health systems show up for you. Navigating healthcare can feel overwhelming, but you can count on real doctors, real nurses, real people, providing quality, around-the-clock care when you need it most. They're in your corner, in communities across America. Your neighbors, your lifelines, right beside you, holding your hand and helping find answers. That's what putting patients first actually means. Learn more at strengthenhealthcare.org. Brought to you by the Coalition to Strengthen America's Healthcare.
The expectation and the norm is to win, and that is what we will be able to do here. I believe in the power of UCLA.
It's a new day for UCLA football with new head coach Bob Chesney taking charge, and we need you to be a part of it. The right man is at the helm in Westwood, and the time is now for you to put your support behind the Bruins. UCLA football is ready to win, and we can't wait to see you this fall. Visit UCLABruins.com/tickets for more info on how to secure your seats for the 2026 season. Go Bruins!
Stocks pulling back today, but finishing the day well off the worst level of the day. The Dow plunged about 1,200 points shortly after the opening bell this morning and ended lower by 403 points at 48,501. The S&P 500 down 65 at 6,817. And the NASDAQ down 232 at 22,517. The yield on the 10-year note hovering at around 4.05%. Taking a look at the price of oil, it's been moving higher lately. Up around 85 in London, right now just around 75 in New York. We see gold hovering at around 5,121 and change. It pulled back a bit today. Silver back to 82 and change, got close to 90 yesterday. We see platinum at the moment at 2,090 and change, and palladium at 1,668 and change. Looks like the defense names have pulled back after that big spike yesterday. Northrop Grumman shares down nearly $9 at $7.59 and change. Lockheed Martin pulling back 9 at $6.67 and change. NVIDIA down 243 at 180.05. ExxonMobil in the oil patch down more than 2 at 150.183. Chevron, which has been kissing record highs, down 83 cents at 188.77. Checking the cryptos now, we see a Bitcoin up a few $100 back to 68,400 or so. Ethereum just below 2,000, back below 2K at 1995, and Doge at the moment at 9 cents. Tech on Money continues here, 790 KABC. Nervous time on Wall Street and Main Street with the focus of attention on gas and oil prices nowadays. We did see the stock market tank right after the opening bell this morning. The Dow was down about 1,200 points and settled lower by 403 points at the closing bell. The S&P 500 down 65. The NASDAQ Composite down 232. The price of oil, let's bring up the latest here as we focus on what's happening there. The price of oil in London, which is the Brent crude price, which is sort of the international benchmark, settled at 81.40 today, up nearly 5%. U.S. authorities saying strikes against Iran will continue for weeks and grow in intensity, and Tehran continued to attack Gulf countries, stoking concerns of the conflict escalating. Oil tanker traffic on the crucial Persian Gulf waterway, the Strait of Hormuz, has come to a virtual standstill, according to the latest reports. President Trump said in a briefing with reporters that higher oil prices should eventually recede. While acknowledging high oil prices for a little while, the president added, "As soon as this ends, those prices are going to drop, I believe, lower than even before," in his words. Concerns that higher energy prices could boost inflation drove U.S. Treasury yields higher today, but they retreated some in afternoon trading, with the yield on the 10-year note now at 4.05% after topping 4% just yesterday. Keeping an eye on all of this and the impact on gas prices. Right now, the price of regular average is $4.72 here in the Los Angeles area. $5.11 is the average price for premium in the L.A. Long Beach area, according to the latest AAA fuel gauge survey. $5.16 is the average price now for diesel, which is sort of the global fuel still. By the way, $3.11 is the national average price for regular gas here in the United States. We're looking at $4.72, as I said, here in California as the average here in the Los Angeles area. Looks like our gas price is now about 30 cents a gallon higher than they were just a month ago. Of course, California dealing with its own unique issues with refinery closures. We're expecting another refinery to close pretty soon. One already closed late last year. And that is definitely adding to upward pressure on gas prices here in the Los Angeles area, on top of some other unique situations happening, of course, with Venezuela and now the upheaval in the Middle East sending the price of crude oil higher, which also obviously impacts the price of gas ultimately. In all this, we're watching the oil names. Some of the big oil names hitting record highs. Chevron, which recently moved its headquarters out of California, hit a record high today and then pulled back down 83 cents at 188.77. ExxonMobil down 239 at 151.83. Taking a look at some of the other oil company stocks that are back in focus. Valero shares moving higher today by 279 at 217.71. Marathon Oil, another big oil company. Let's bring that one up here. Hitting a 52-week high this week at 210.33. Oil prices extending gains today as the possibility of a prolonged Middle East conflict rattles the markets. Of course, it'll be another nervous start to the action tomorrow morning. Over the past 3 trading sessions, by the way, Brent crude now is up about 15%. That's the biggest 3-day percentage surge we've seen since March of 2022 after the start of the Russian-Ukraine war. And WTI, that's West Texas Intermediate, the U.S. benchmark, traded in New York, also rose nearly 5% today, trading at $74.56 a barrel. So the Wall Street Journal notes, with no quick de-escalation in sight and Iranian threats to shipping through the Strait of Hormuz, the market remains on edge as we head into another trading day. Traders also concerned about attacks on energy infrastructure, which could lead to prolonged outages. President Trump today said higher oil prices should recede after hostilities with Iran end. While acknowledging high oil prices for a little while, in a press briefing with reporters today, the president added, as soon as this ends, those prices are going to drop lower than even before. The conflict in the Middle East rattling financial markets, especially the energy markets, with stocks falling sharply early today and oil prices pushing higher early on. The president spoke about the Iran conflict during an Oval Office meeting today with the German Chancellor, Friedrich Merz. He said this, of course, damaging our economies. Merz said, we are hoping the Israeli and American armies are doing the right thing to bring this to an end. Stay with 790 KBC for the very latest on what's happening with the war in Iran and also what's happening with Iran lashing out at its neighbors. We're following those developments as well. President Trump saying what he said there at that news conference, that the U.S. may escort tankers through the Strait of Hormuz. Meanwhile, the Israeli Defense Forces launched strikes on Iran. The attacks continue in the early morning hours. Also, we're getting some statement now from the president of Turkey, who has said Turkey is making intense diplomatic efforts to end the conflict in the Middle East. The Turkish leader said attacks on Iran and missile and kamikaze drone attacks by Iran and neighboring countries in the Gulf have fueled instability. He gave a televised speech today. Earlier, the foreign minister of Turkey met with Washington's Syria envoy and also spoke with his UK counterpart to discuss the current security environment in the region, evaluating in detail the diplomatic efforts that could be undertaken to end the hostilities and establish stability. Meanwhile, the son of Iran's last Shah, Reza Pahlavi, who also positioned himself as an alternative if the Islamic Republic falls, called today for national unity from Iranian minorities as the war continues to engulf the Middle East. Reza Pahlavi, of course, has a large following here in Southern California and was celebrated over the weekend in Westwood and other areas around the world. Pahlavi said in an ex-post today, looked to assure ethnic minorities in Iran that they would not be discriminated against if he were leading the country, and appeared to urge them not to use the current conflict to press for separation. In his words, we stand at the threshold of this regime's fall, yet we must remain vigilant and prepared and deny opportunistic forces, those who've long cast covetous eyes on Iran's soil, the chance to exploit this moment. He went on to say, you are an inseparable part of Iran's historical and cultural fabric. In his words, he said, I'm confident that you will remain steadfast in this covenant. He went on to say, I firmly believe that through national unity and shared resolve, a bright future awaits you and every Iranian. Quoting Reza Pahlavi, the Shah's son, who could possibly end up back in Iran at some point. Coming up, we'll speak to a military analyst about the latest military moves, including Hezbollah saying it targeted an Israeli tank on the edge of a Lebanese border village hours after Israel's defense minister ordered his troops to take control of more strategic positions inside Lebanon. In a statement, the pro-Iran armed group said in response to Israeli aggression after monitoring movements by Israel, the Hezbollah group has targeted a Israeli tank. So there's back and forth with Israeli troops now in Lebanon. The IDF claims to have struck a building housing Iran's assembly of experts. Another big story today. An Israeli news network said the building was hit in an attempt to disrupt the 88 members from choosing a new Iranian supreme leader.
The expectation and the norm is to win, and that is what we will be able to do here. I believe in the power of UCLA.
It's a new day for UCLA football with new head coach Bob Chesney taking charge, and we need you to be a part of it. The right man is at the helm in Westwood, and the time is now for you to put your support behind the Bruins. UCLA football is ready to win, and we can't wait to see you this fall. Visit UCLABruins.com/tickets for more info on how to secure your seats for the 2026 season. Go Bruins!
Motec on Money continues here in 790 KABC. Following the war in Iran, let's bring in our military expert here, our go-to military expert, retired U.S. Marine Corps Lieutenant Colonel Hal Kempfer, former Marine Corps intelligence officer, national security analyst, and host of the Strat podcast. Looks like Israeli troops in Lebanon today as Iran continues to lash out at some of its neighbors. Looks like the airstrikes against Iran continue by both Israel and the United States. Colonel, give us your reaction to all these epic developments over the past couple of days.
Well, Frank, it's been moving pretty fast. It started out with just the most amazing decapitation strike ever, taking out Ayatollah Khomeini and about 49 others. Top senior leaders in an autocratic, theocratic system, which means that they're the folks that reserve the decision making, which is through their entire security apparatus into something of disarray. It looks like a lot of decisions being made on retaliation are being made at a more junior level. So in terms of national strategic cohesion by them, they've got real problems. Now, the thing that's interesting is Hezbollah in southern Lebanon was kind of holding off for a while. It wasn't quite clear if they were going to weigh in to do something in support of Iran. Well, they made that decision. They launched missiles into Israel. They actually launched a couple of missiles into Beirut, and with that, they're now combatants in this operation on the side of Iran, and that's given a green light for Israel to go in and do a lot of devastating airstrikes, along with a lot of with more actions on the ground. And they've mobilized 100,000 reservists, so I think they're going to go back in, and then we'll see how that goes. Now, of course, the other side too is Iran has managed to basically go to war with all the Arab countries. They've launched drones and missiles on all the Gulf states, Saudi Arabia, Jordan, and of course Israel. So now they've kind of gone to war with the Arab world. Things have shifted a lot since Friday night.
On there live with retired U.S. Marine Corps Lieutenant Colonel Hal Kempfer, and looks like Saudi Arabia is poised to strike Iran after Iran launched drones and or missiles at Saudi Arabia, and other countries surrounding Iran have now been hit. What do you see developing here as far as other countries joining the U.S. and Israel in striking Iran?
Frank, that's an interesting observation. A couple of days ago, I probably went out on a limb and I said, I wouldn't be surprised if somewhere down the line, one or more of these Gulf states ends up getting involved with the overall military mission. And now that looks like it could manifest itself sooner rather than later. The thing that Iran did was they attacked the critical oil infrastructure of Saudi Arabia. They went after one of the major refineries, and they've been hitting other infrastructure sites. They've been hitting iconic sites. They've been hitting hotels. They've been hitting all sorts of stuff within, the UAE, Bahrain, obviously Saudi Arabia, Qatar, Kuwait, Iraq, and of course Jordan. And so with all that said, all these countries have a reason to do something about it, which is really unusual because if you look at before when things were going on, they tried to maintain fairly decent diplomatic relations with Iran. They may not like Iran, but they kind of tried to maintain cordial diplomatic relations. Well, that's off the table now. We've seen a complete shift in the entire region.
Very few people predicted that Saudi Arabia and Iran would lock horns like this, but it was mentioned, obviously, with a lot happening in that region over decades and the Persian Gulf War. And so what about Iraq in all of this? We've seen some drones and rockets strike Iraq at some targets where Americans had been stationed, right? What about Iraq, which became very friendly to Iran following the overthrow of Saddam Hussein?
Well, Iraq is predominantly Shiite, and of course, there's a little bit of Sunni Shia stuff in all this, a lot of Sunni Shia stuff in all this, and so the government is predominantly Shiite. There are militia groups there, Shiite militia groups, which are umbrella thing called, I think, the Popular Mobilization Front. And there's been a move by the Iraqi government to actually have them demilitarize, disarm, and become simply political parties within the system. But they have been pushed. They're proxies for Iran. They've been used by Iran for a number of terrorist type of attacks. Well, things shift. And now those different groups are having to figure out, do they want to maintain any affiliation with Iran when Iran has attacked Iraq and really put some big distance between where the Iraqi government is and where these militia groups might think they are. So you could see a big shift within internal politics in Iraq, and you could also see a kind of a shift of the entire governance structure of Iraq in terms of where they work with these whatever happens with these Shia groups.
Of course, a very unfortunate situation involving friendly fire. Our ally Kuwait inadvertently shooting down 3 of our fighter jets. What's your reaction to what happened there, and how did something like that happen?
Well, thank God nobody died. And I have to tell you, I was really surprised because we've been flying jets out of Kuwait, well, ever since we went into Kuwait during Desert Storm, where that's where I personally was. Yep. And we've been flying jets out of there constantly. So this is not something that the Kuwaitis aren't used to. They're used to seeing our aircraft. But in anytime you have high intensity operation like this, and you have enemy aircraft coming in and stuff, the opportunity for a blue on blue thing happens, and that's what happens here. I'm just thankful that nothing bad happened to any of them.
Thank God. Colonel, what about the Strait of Hormuz? Getting various reports that it's closed, it's not closed. President Trump saying looks like a big chunk of the Iranian Navy has been sunk already. And the president today said it looks like the U.S. could be escorting tankers through that Strait of Hormuz at some point. What about that critical choke point that's so critical to the world's oil supply?
Well, right now it's shut down. That's 20% of the world's oil goes through there. And obviously President Trump wants to get oil moving through it. So he said, look, we'll take on the risk of that. I don't know if that involves they're going to be hiking tankers in order to get them through. We're going to do some sort of naval escort. I don't know, but I wouldn't be surprised if that's a combined action with other countries. And frankly, there's some countries there in the Persian Gulf that might want to add naval assets to that escort mission in order to bring that back. But the destruction of a big chunk of the Iranian Navy really reduces what the Iranian Navy can do. My only question is the Revolutionary Guard Corps small boat operations. I'm concerned about some of the Iranian submarines that could be sitting on the bottom waiting for opportunistic shots, and of course sea mines. They got a lot of sea mines.
All right, and what about the German Chancellor at the White House today, and the Europeans now coming around on all this, including the British, allowing us to use one of their bases and so forth?
Well, they seem to be more amenable to it, and I think it's going to shift. The British, a lot of headwinds for Starmer, particularly in Parliament. He's been taking a few hits rhetorically on that. But he seems to have softened his position, which originally was very much opposed to anything like this. And then we're seeing the Germans, obviously, looking for ways to be more constructive. France, not so much, but somebody reminded me of the famous saying by General Schwarzkopf that going to war without France is like going hunting without an accordion. I always found that rather amusing. But France is kind of being the pushback on this one. So we'll see. We'll see if we see more they got a lot of counter mine capability within the European navies. I really.
Colonel, thank you very much for that thorough assessment. Of course, General Schwarzkopf, the hero of the Desert Storm, thank you very much for joining us live here. That is retired U.S. Marine Corps Lieutenant Colonel Hal Kempfer, former U.S. Marine Corps intelligence officer, following what's happening in the Middle East with us here. And we'll be back again tomorrow at 4 on 790 KABC.
The expectation and the norm is to win, and that is what we will be able to do here. I believe in the power of UCLA.
It's a new day for UCLA football with new head coach Bob Chesney taking charge, and we need you to be a part of it. The right man is at the helm in Westwood, and the time is now for you to put your support behind the Bruins. UCLA football is ready to win, and we can't wait to see you this fall. Visit UCLABruins.com/tickets for more info on how to secure your seats for the 2026 season. Go Bruins!